Hello again, everybody. It's Sandy here with Garcia Research. Just wanted to talk a little bit about these markets. As you know, we like to look at the currency pairs that we like to trade. Just looking at the general climate here. Let's take a look at all the pairs that we'd like to trade. Of course, what I want to do is take a look first at the dollar index, because that is the backbone, or as you say, that's basically where we get our that's where we actually start what we're looking at. So just kind of looking here at the longer term picture, you can see that the market has been in this upward channel, and the important thing for us to consider is the fact that we are trading right near this 50% retracement level. You can see these 50 right here is a fib level, and the what you want to take a look at is this high to low going back to December 20th of 2016. Okay, so this move down here is what I'm actually measuring, and you can notice that we actually tried to go up above the 50% retracement level. The market is coming back down, and in fact over the past couple of weeks it's been using it as resistance now. What I'm looking for is to see if this market can actually break down below this lower channel line here, and then get going to the downside. This right here is the point figure chart. I'm looking at the point figure, but most importantly to consideration here is that it does look like, at least from a shorter term perspective, the market is still in an upward bias. You can see here that on the lower time frames, the market is really not violating any of the uptrend lines yet, but you can look here at the medium term perspective and see that we have a downtrend line in force. So this is what I'm actually watching to see if this market could respect this downtrend line here, and you're going to see something to the effect of what I'm also noticing in, for instance, the Japanese yen. Okay, so the Japanese yen is also going to look similar to this when we actually start to take a look at that. So overall, the expectation here is that wondering if this market is actually going to go lower, and that's definitely what my expectation is here. Just keep this in mind as you continue to trade. This right here is a 240-minute chart. Over the past couple weeks, the market has been trading off this high going back to the 15th of August. You can see how the market has traded lower and then bounced. And over the past couple of days, from the end of last week, we actually hit this 382 retracement level on the lower time frame. So now the question is whether or not this market is set up or poised to go lower and take out this 94, 93 level. Remember, this is the dollar index futures. This is not the dollar index that you might trade or that you might see in your MT4. This is completely different. So keep in mind here that the expectation is that if we can continue to stay below this 382 and maintain this downtrend line, then I'm looking for this market to actually continue to move lower, with the expectation of pushing down into the low 90s. You can see here that I do have some targets down here. In terms of right now, let me just take a look here at this small move. If I measure this this wave here, you know, I'm looking at a target of 94.77 and 94.50. These are some areas of of support that I'm actually looking for the market to potentially reach down in towards. Okay, so that's the dollar index. Remember, the expectation here is that if we continue to hug these lows, then I'm looking for this downward channel to be violated, and then for this market to actually go lower. Let's take a quick look here at the Canadian dollar. Okay, so the Canadian dollar, if you actually zoom out, then it'll give you a little bit of a perspective in terms of what we're taking a look at here. So this is going back quite a ways back to, you can see the 01, 02 highs. This right here specifically is 18th of January 2002. And what I've done is I've measured this high down to this low. Okay, so what I've done is I've added a Fibonacci level from this high to this low, and this gives us a little bit of a perspective in terms of where the market, a little context, where the market is right now. You can see how the market bounced up to this 78.6 level, and then started to find some resistance. After the market found the resistance, it actually started to trade down, and you had this continuation pattern, which was violated. Now what I'm looking at here is the fact that the market continues to hold above this short-term trend line, and in fact what we've done is actually traded above this formation. You can see this downtrend line has been violated. The market is trying to stay above this upper trend line. So right now we are in the midst of what you could call is a bull flag. All right, so that's one scenario to take a look at, how the market has been rising off of this low, continuing to make higher lows and higher highs, and on top of that breaking out of this this big massive formation. So my expectation here is more upside in the Canadian dollar if you can stay above this formation. I'm looking for a buying entry down here at 128.50. Looking for this market to actually drift lower into these lows, and then rocket or push higher off of these areas. So the buy zone is down here at 28.60. I think that is going to be the best place to be taking a position in the Canadian dollar. This is the Swiss franc here. Now, something to pay attention to. Really no need to zoom out like we did in the Canadian dollar for context. But the important thing here to pay attention to is how we have been trading near this parity level for the past couple of years. You can see how the market has come up to the one area, the parity level, and now we're actually starting to roll over and violate this short trend line. So and now sense purposes, what you're looking for here is more downside in the Swiss franc. I'm thinking that this market could actually reach down into the low 90s, assuming that this market continues to hold below this rising trend line. As you can see, over the past couple weeks, we've gotten a nice little trigger here for you to go get short, and now the expectation here is looking for sideways consolidation. Your first target is this 98 area, at which point I think there will be a dead cat bounce, and then this market actually moves lower. Looking at the list, just going down the list here, here's your Australia and New Zealand. New Zealand is in this tight range going back to 2015, and right now we are at the upper boundary of this range. So the question here is whether or not this market is going to respect the current formation the way it is, and to see if this market will start to work its way lower. Okay, so what I'm expecting here is to see if this market can actually break down below this rising trend line. This is a short-term trend line with respect to this big picture here. Even though the trend line goes all the way back to April, you can see kind of the context of what we're looking at is that we're getting squeezed up into this upper boundary of this big massive formation. And the last time that we were up in this area, the market actually found some resistance. So the expectation here is that we actually break down below this trend line and then work our way back down to the 105 area. You can see here that the last time that we were up in this area, the market proceeded to move down towards the lower boundary of this formation. Here's the Aussie CAD. Australian Canadian dollar is in a a big massive consolidation going back to 2013, and right now we're working our way all the way down towards the lower end of this boundary, which is around 92.5. Okay, so in the midst of all of the confusion, you did have this falling channel here, this short-term channel, and I say short-term with respect to the context here in terms of going back to 2013. You can see this short-term trend down channel goes back to May of 2017, but the expectation here is that we start reaching down and taking out these extension targets in the Fibonacci tool. So in a sense, what my expectation here is to reach all the way down to 92.5, and right now you can see how the market is respecting the move to the downside, how we're actually breaking below this falling channel. Notice the market came down below this channel, came back up to it, and is using it for resistance at this point. So I'm expecting this market to actually continue to move lower, work its way down to 92.5. So right now, as it stands, as long as we can stay below this lower trend line, I think that you'll continue to look for more downside pressure. Euro pound. This is the euro pound. I was thinking that this was going to hold inside of this channel, and sure enough, over the past couple of months, the market has continued to rally, breaking above this channel, and now we're actually setting up a nice trajectory to reach back up into the 92 area, as long as this short-term trend line right here can actually hold. So your trend line is going back to the 15th of June. You can see this low right here, where if you can connect these lows, then the expectation is that you want to be buying as the market comes back down to 90 even. Okay, so you have a fresh breakout point right now that's showing just recent. Let's see if I can let's see decimals. I want to get a better idea of this price. So this high over here is at 90.12, and right now we're trading about 90.37, but looking for a push down to 89.75, right up against this trend line. I would be testing this trend line to see if we can continue to push higher in the euro pound. Here's the Aussie Swiss franc. Now the Australian Swissy has had this dramatic move going back to 2015. You can see this big push down through an important level, and as it came back up, it bounced at a pretty important level in the same. So one thing to pay attention to is how this area up here has been resistance, and now you can see how the market is finally rolling off of this level. Of course, right now as it stands, we are at the lower end of this trading range. You can see this low going back to the 5th of June 2017. This right now is acting as support. The question here is whether or not this is going to actually maintain a good level, or if this is going to be a good level to be trading around. And I would say that if you're interested in getting long, you could look for a short-term pop back up to the 74 area, at least for right now. But right now it looks like this market is turning around, so want to be alert here that we could be setting up for a push back up as opposed to breaking down. So if we continue to hold above this low, then that's definitely going to set up for a nice move to the upside. Alright, so I'm going to actually be watching this right now. If you're getting long, you can actually place a stop below this low at 71.42 and then look for a short-term burst at least to hit up to 72.91. See, in the meantime, while I'm actually looking at this trade, I am looking at placing my orders because I like the way this market is acting here. So anyways, I think right now I'm looking at actually testing the long side here to see if this market could stay above this 72 or the 71 half level. I think that time will tell. Okay, so let's go take a look at the CAD Swiss. Canadian Swiss franc is actually in the middle of this trading range. You can see this looks like it could go either way. As a matter of fact, what I'm looking for is to take action either on this lower trend line or on the upper boundary here. The upper boundary, if it gets back up to 79, looks like 79.50 is right up near this trend line. I would be looking to get short, or if it came down to this lower trend line, I'd be looking to get long 73.85. Okay, but right now you can see that we're in no man's land, so there's really no reason to be taking action in this market. Let's take a look at the pound Canadian. This is pretty interesting because we've been in this downward channel and the market continues to trade lower. With that in mind, the question is whether or not we're going to push continually below the 61.8% retracement level. Notice that it's actually looking at resistance here at 168.15. So what my expectation is to see if this market could actually get back up to the upper boundary of this channel, and that's where I would actually look to get short. The expectation here is that this market continues to move lower down to 161.41, assuming that this market does not push back above the 61.8% retracement level, and assuming that it does not get back above this upper boundary in the falling channel. Alright, so as it stands, you can see that we are in a nice downward trend here, and you don't really want to mess with it. Shorts are the only play there, so that's pretty much the reason why I would emphasize only picking one side of the trade. Okay, so taking a look at the pound Aussie. The pound Aussie is coming off of this upper boundary of the channel line. I like this for more downside here, assuming that we can stay below this high at 176.71 here. Alright, so you can notice here that the market was able to come up to the upper boundary of this channel, and now we're actually respecting it, pushing lower. So my expectation here is as long as we can stay down below this area, the market should actually reach down into the low 170s, down in towards 169 and change. This right here, I'm just putting up a short-term trend line that if you're still on the sidelines, you still can expect a push lower if this market can get down below this rising trend line here. Okay, so the expectation is that the market actually breaks down below this trend line, and that will actually bring in some more selling. So that'll give you an opportunity to get short if you're not already short as it is. That'll be another confirming factor for you. Here's the Euro Canadian. Now what we're looking at in this market is a big uptrend channel going back to 2012. Now, what we're looking at is a break from a shorter term perspective of this recent uptrend, but the expectation is that this market could really only go down to 144 or 145, which is the lower trend line here. So right now, as it stands, we're actually pushing down. We hit the 1272 Fibonacci extension level off of this brief up move. The expectation here is that we can continue to move lower, but in all likelihood, my thinking is that this market is going to drift down into this lower rising trend line here, this long-term trend line, and that's where I would actually be looking to get long. Right now, we're still kind of in some in the middle of this whole entire channel, so I'm not really excited about getting active here. You know, if you're looking to scalp this market, that's one thing, but I think that there are better opportunities out there to wait for in terms of getting positioned for a big move. Here's the Euro New Zealand. I know that there were reports out there that this is going to be a double top. I'm kind of on the sidelines here because you can see that what I'm looking at, the emphasis here is that you have this high right here down to this low, and we're trading right at the 78% retracement. We're actually trading above it. So your next target is 176 even. You have the 88.9 Fibonacci level here, but as it stands, you can see how this market has been in a sideways consolidation. You do have two equal lows here and two equal highs. So one of the considerations that people are suggesting is that this is going to make a dramatic 8,000 pip move to the downside, and that is possible, but at the very least we have to continue to trade lower in this 174.16 area. This is the most recent high that we're looking at. We have to violate or break down from here, and it doesn't look like it's ready to do that in the Euro New Zealand. Stand by for the setup there. Okay, here's the Euro Aussie. Okay, so the Euro Aussie just recently is showing us that we are at the possibility to be an upper boundary of a downward trading channel. Okay, it's a lot to say. So my expectation is to look at the big picture first. The big picture is showing us how we've been in this sideways consolidation going back to 2014. And the market right now is at the upper range of this sideways consolidation. So the longer that we can stay below 161 even, the higher the likelihood is that we actually work our way back down to 140 over the next coming years. So what I'm trying to figure out here is where I want to get positioned, because right now you can see here that we are at the upper end of a short-term down channel. So typically what I'll do is I'll throw in my Fibonacci's to see if there's some key levels that I should be paying attention to. After I measure this move from high to low, you can see how we are up above the 61.8. Another consideration is to take a look at this low here, the lower high. So you can see where the beginning of my tool was, and then what I'll do is I'll move the bottom here, and it looks like this is actually closer to the 78.6 level here. The bottom line is that we are at some key levels, right? The 78.6 is right about 159.42. You also have the psychological level at 160. So the expectation here is that if the market could stay down below 160, then I'm looking for this market to continue to move lower and push down into you can see here this low right here is at 152. So we have a nice move coming. If we could stay below 160, I think that this right here is a fake out. But remember, patience is going to be the name of the game here, because we have all kinds of time to allow this market to do what it's going to do. That's the whole issue here, is to let the market do what it needs to do. This is the pound Swiss. Now the pound Swissy is showing us this breakdown below this rising channel, right? So this is a continuation to the downside. You can see if you zoom out a little bit that going back to 2014, the market bounced up, came down, took out the low from 2015, and ever since it did that, it's been consolidating in a rising channel, which we would consider a bear flag. But the important thing to pay attention to is the fact that we've broken below the lower boundary of this rising channel, and when that happens, that's setting up for a continuation of the downside. So my expectation here is that if we do consolidate in this area, that's okay. I want to be looking for a place to get short, and you can see that the most recent level of support was at 129.34. You can see this low right here was violated just recently, and now if we get a push up into this level, then that's where I would be looking to get short. So let me draw a quick little trend line here. This will actually keep me in tune with where I need to be focusing here. Okay, so that right there is going to be the level that I'll be watching for an entry in the pound Swiss. So 129.80 is, or I should say 130 is really the level to be watching in the pound Swiss. Euro Swiss franc. Okay, so the Euro Swissy had this really dramatic push down, after which we had a rising channel, and my expectation is that this market is nothing but a bear flag in the making. But you can see here that the market was using this last breakdown point up around 120 as resistance. So that's kind of the anchor that I've been leaning on, is the fact that this market, once it broke down below these levels, the market had rallied all the way up to this area at 120 even, and now it's starting to fall and took out this this lower trend line, and then it actually rallied back up, creating this minor downward channel. So the question here is whether or not we're going to continue to push lower and take out this lower boundary here, which I do expect overall, but in the meantime we could actually bounce back up to this 119 area. This area is probably a level of support. Down at 111.80 is what I'm looking at. You have the lower end of this boundary line where I'd be looking to look for some tester trades to the long side to see if this market will actually bounce up and respect this lower trend line and then fake out a lot of the bears out there. I just don't think that it's ready to move back through this lower boundary line. But again, just like the other trades where you have this rising this bear flag, is that if you can go down below this, then that's going to add more pressure to the downside. Here's the New Zealand yen. Okay, the New Zealand yen, if you go back to 2008, you take this low and then measure your Fibonacci tool up to this high, going to the 8th of January 15. This kind of gives you a context here that the market is trading right at the 382 for right now. I was thinking that this is going to be a reverse head and shoulders. Okay, I was thinking that this right here was going to be your left shoulder, this is going to be your right shoulder, or this is going to be your head, and then your right shoulder was going to be formed over here. So I was all watching to see if this market was going to hold this area and then push back up above this falling channel. The problem is that it broke below the left shoulder, and the market has continued to trade lower. So I'm thinking that, hey, well, maybe this isn't a reverse head and shoulders, maybe it's actually a double bottom, right? So you had this push down to this low right here, bounce up, and now we're actually pushing back down to this low. So I'm watching this low right here at 71.33, this low right here, to see if the market comes all the way down to this level and then uses it as support and then rallies off this level. And even if it breaks below it, what if it comes down to this 69.5 and uses that as support instead, and then potentially even that becomes the head of a reverse head and shoulders, with this being the shoulder right here. Okay, so you got to be willing to adjust your insights and let the market dictate whatever it wants to do. In the meantime, right now you can see that we are at the lower end of this channel. So if you're shorting the upper boundary of it, that's a good place to be. Looking for a downside in terms of pushing down to the 70 even level, right? So the action, the place to be getting short is up near the upper trend line here. You don't want to be getting short here, even though you are seeing weakness in the New Zealand yen. Here's a pound New Zealand, and again the pound New Zealand is showing this rising channel. You can see here that in the short-term perspective, the market has been moving sideways. You can see here that you do have a falling trend line, but you also do have these equal lows here. So I'm looking at this as a big consolidation zone. The market is in no man's land right now. You want to be taking action either at 190 or up at 196. Getting short at 196 and long at 190 with the stop just below that, or if you're getting short up here 196, a stop just above this trend line here, with the expectation of moving either down towards this bigger trend line down here or the bigger trend line up here. Remember, you're in the midst of this upper channel. You're in the no man's land. So one of the things to look forward to is that the bigger moves are going to be out near the outer boundaries of these channels. And so in the meantime, I'm just kind of just kind of waiting for this market to actually reach some extremes. The New Zealand Canadian dollar is actually showing us a nice little setup here. You can see that if you zoom out, going back to, you can bring in enough data for whatever you'd like, but the most important thing here is to take a look at this triangle formation. The market has broken below the 88.30 level and is pushed down to 87.03, or this is the low at 85.78, and right now we're trading at 87.03. I'm looking for this market to actually continue to move lower as long as we can stay on the down beneath this lower trend line here. Okay, so New Zealand Canadian dollar is definitely setting up for a nice move to the downside. Look for a target somewhere in the neighborhood of the 83 area, down at these lows going back to 2015. Okay, so in the meantime, you can see how the downtrend lines are getting steeper, right? And therefore the market is accelerating lower, and this is the kind of confirmation you need that the bears are in control, right? You just continue to make dramatic downward trend lines. So in all likelihood, any kind of move up here, let's say back up to 88.67, is going to be the backside of this trend line, and you could probably use that to be getting short. Here's the New Zealand Swissy. Now, one of the things that I'm paying attention to is the fact that you had this up move off of the 2015 low. Okay, you had this up move off the 2015 low. You had a double top, and now we're actually starting to make our way back down below the intermediate low, which is right here at May of 2017. Once you actually break down the intermediate low, you can see that this double top pattern is complete, and now we're looking for a downside move. If we can get down below these major the major Fibonacci levels. So let's see if I can actually take a measured move here. What I'll do is I'll measure this high to this low, which is the intermediate low. Okay, so there's the measurement of this trading range. And then what I'll do is I'll copy and duplicate it. Normally I can just, let's see what happens when I, so all I want to do is move this over to the breakdown point, which is over here. And it looks like this is setting up for a push down towards the 88 area.
Well, yeah, I mean, depending on how you want to look at this, you could say it was a decisive move, or you could say it was erratic. I mean, this takes place days after Lester brought on people like Goldman Sachs.
Okay, so this right here is the breakdown point at 67.09. You can see the low right here is 65.20 that we're at, but we have more downside to go in the New Zealand Swiss franc. I'm looking for a target down here at 61.68 here, so plenty of room to move here. And basically what I've done is taken this high to this low, projected it off the breakout point, and here we are at a measured move down to 61.68 in the New Zealand Swiss franc. Okay, so here's the euro. Now the euro had this interesting formation, this triangle where we broke out of. The expectation here is that this market was going to move to the downside, and in fact we did hit our target. If you actually take the measurement of this triangle here, measuring this high down to the low, you see this low right here, and then actually moving it out to the breakout point, and you can see that we actually surpassed the measured move. Okay, so once we get to the measured move, you can see that everybody started to take profit, and now the expectation is whether or not this market is ready to move up. The reason I'm saying that is because you can see here that the market actually is forming a reverse head and shoulders, and my contention right now is that this right here is your left shoulder, this right here is your head, this right here is your right shoulder, and then you have a trend line here that you're breaking out of, which is your neckline. Okay, so this we're watching to see if this market can move higher in the euro. And it's kind of funny because I hear other people's commentary, and they want to ignore this, which is fine. I don't. They try to say that there's really nothing happening here, but until we get below this 115.37 right here, this is your stop out point. If you're looking to get long here, that's exactly what I'm looking to do, is trying to get long this euro with a stop just beneath this low right here. And considering the expectation here is to take the measurement of the move from the bottom of the head to the neckline, and then project it off of the breakout point, which is here. And so I'm looking at about, this says 118.5. Okay, so this right here is my target. 118.5 is a conservative move for this thing. Alright, so that gives us a nice reward to risk ratio. If you were to enter right now, here we're at 116 with a stop below 115.20. that gives us nice 80 pip risk with a reward of 258 pips. That's pretty good numbers right there. This is the euro yen. Okay, so the euro yen, once again, looking at this down move from the 26th of 2014 to the 2016 low. Okay, measuring this downward move, and the market traded up to the 61.8% retracement level, is now actually bouncing off the 382. You can see that it's using the 382 as support as opposed to resistance, which is what you would expect, but it doesn't matter right now. What I'm looking at here is this downward channel, and we're at the upper boundary of the downward channel. I'm looking for resistance right here at 130.47, which is the 50% retracement level. And the other thing is that if we can get down below this 125 area, which is the 382, if we can get below this, then I'm looking for more downside in the euro yen. Okay, so one of the things that I want to emphasize here is that you want to be getting short on the upper boundary of this trading range and looking for downside moves. You don't want to be buying near the low. You don't want to be shorting near the lower end of this range, okay? Because we have the potential here for a double bottom here, but that's not valid until we get above 131.60, which is this intermediate low right here. We have to break above this low, this high, the intermediate high. Sorry, we have to break above the intermediate high in between these two lows in order to validate this. Okay, so we'll go over here and put another trend line right here. That's going to be my breakout point. So I'll be watching that very closely to make sure that we stay beneath that level and work our way down here in the euro yen. Here's the Japanese yen. Okay, so the Japanese yen, zooming out to get a little context, and the fact that we have been in this upward move since 2011, right? This is it. The low in 2011, this is like the dead low that goes way back, a long time back. This is a very important low right here. So we've pushed off of this low. This is a big trend up. Now we're in a consolidation. This is a retracement here. All of this stuff, and now the market has broken out of this downward channel. You can see here that as it stands, it looks like the market is trying to hold above this falling channel. You see this downward channel here. Market actually broke above here, and now we're starting to work our way back up off of the back test of this trend line. Okay, so the expectation here is that we should be looking for more upside in the Japanese yen. The problem here is that you do have upside, or should I say, we're still in this consolidation environment. But yes, I would be looking to buy this somewhere around 110, with the expectation of this pushing up to 118, and looking for this market to actually take its time. You don't want to sit there and use all your ammo. You want to be able to spread your trades across multiple markets, because this market looks like it's in a consolidation phase going back to 2017, and it could very likely even push down below this higher trend line here. But in fact, right now you're looking at a fresh setup to the upside. Here's the Aussie yen. The Australian yen is holding above the 61.8% retracement level here at 80.54. You can see here, if you actually connect, you measure the low here from the 27th of 2016 all the way to the high of September. 2017, and then you can see here the Fibonacci level at 80.50 is holding right now. So this is kind of interesting for me. I'm actually going to be paying attention to getting long here, considering the fact that we continue to put in higher lows and higher highs on a short-term basis. And then my target is up here at 95.95. That is a measurement of this low to this high, assuming that this is an ABCD pattern. You have the A down here, the B, this is a C, and then a big D is way up here at 96. So the Aussie yen is actually setting up for a very dramatic move. Here we are looking at the Japanese yen, the pound yen cross rate. Okay, so what I did was look here, measuring this high from 2015 down to this low of 2016. That gives us this level over here, this 382. The market also, what I did was measure this low to this high, and this gives us our short-term down Fibonacci levels. So to give you a context here, it looks like the market went down, rallied, retraced up to the 382, came down. Now we're retracing down to the 50% retracement level of this minor uptrend. The question here is whether or not we're going to respect this 50 level and then continue to move higher, breaking above this this upper boundary of this this downward channel. All right, so that's kind of what I'm watching here, is to see if this market can hold above 170 here, or 140 is the level here. 140.50. You can see the 50% retracement level. If you can hold above that and then push above the 382, then the expectation here is that we actually start working our way back up to 150. So right now I'm looking at the lower time frames to see if we start breaking above key moving averages, etc. But longs are the play here in the pound yen, as long as you can stay above this 140 area. Here's the CAD yen. The Canadian dollar is the same kind of insight. You can see here measuring the low from 2016 all the way to the high of 2017. And then the Fibonacci, it looks like it held the 61.8. Now you're breaking above the 382. We're establishing this rising channel here. Everything looks like it's setting up for a nice move up to this 96 area here in the CAD yen. Okay, same kind of ABCD setup here. You got the A over here, the B, then the C, and then the D is expected to come up to 96 and change. Alright, so be on alert that we're starting to move above the 382 of this retracement area, and that's setting up for a nice move to the upside. If we can hold above 85.40, if we can hold above 85.40, if we can hold above this lower trend line here in this channel, yeah, I'm thinking that this is probably going to continue to move higher. Swiss yen, the same thing here. This market held this 50 to 61.8% retracement pullback. You can see how this low over here, high, and then the market pulled back into these into this range. Okay, so as it stands right now, we're actually pushing above the 382, which tells me right now that I would probably use the 382 as support going forward. I was thinking that this is going to be a breakdown zone, and you see my kind of rising wedge here, thinking that there's going to be a continuation to the downside, but in fact the market is actually pushed back up into this channel is what it should be, because now we have two lows that we can connect here. And let me get rid of that, but what I'll do is draw that, and now you can see that's the appropriate rising channel. Okay, so now we want to be looking for pullbacks down into the lower channel zone, looking for this market to be overextended right now, but If we get a push down into the lower 111 area, that'll be a nice buying opportunity. Here's the Australian dollar. Now the Aussie here, you got to zoom out to get it context. Taking a look at the 2008 low all the way to the high of 2011. Okay, if you take a look at this measure, take a look at measuring this move, then you can see the major Fibonacci levels here that we're trading against. The market came down into the 2015 area, made a low right at the 78.6, started to bounce back up, ran up to the 61.8, and now we're actually trailing off. So you can see here that we're actually moving down, but we are targeting the 70 area, which is the 78.6 again. You can see that you do have a minor downward channel here that is targeting the downside. So any kind of move back up to 74.5 is going to be a shorting opportunity for a push down in the 70.92 zone. I say short term, even though it's been over the course of this past year. But again, this is really easy for me to take a look at these, give it a short-term nomenclature compared to what we're looking at in terms of the big picture here. That's very vital to me to look at a bigger, a down or a bird's eye view as opposed to being so caught up on the day-to-day activity. So it looks like we're not done going down. We have a target here at 70 even. And you can see here that this consolidation or the retracement of this big move has been complete. Here's the Kiwi. Same kind of expectation here. Now the move that I'm looking at goes all the way back. The same thing, this 2008 low to the 2015 high, the 2014 high. Same thing as the Australian dollar. Okay, so now that you've seen the up move that we're measuring, you can see that we have Fibonacci levels that we're actually playing with. Downside target right now is at 64 and change. You can see how we continue to push below key levels here, and the market should use this 50% retracement level as resistance at 68.50. One of the questions here that I ask myself is whether or not this market is going to hold the Fibonacci level that is established off of this minor range. And right now you can see here that we did bounce near the 78.6, right? You can see the 78.6 right here, but the market, in my opinion, is really paying attention to the bigger Fibonacci levels. Okay, so in all likelihood, my expectation is any kind of rally up to the 68.30 area is going to be a nice place to get short for a push down into the 64 even area. I think that this market is not done going down. Finally, I'm looking at the pound dollar here. This market had a dramatic low down at 120. Okay, so you had this push down to 120, and then the market bounced all the way up to 142, and now we're actually starting to push back down again. You see here that the 142 area ties into the previous lows going back to 2009. All right, so the market came down, broke down below those lows, rallied up to them, used them as resistance. Now the question is whether or not this market is going to continue to move lower and take out this 120 area. That's definitely possible. But in the meantime, what I've done is I've taken a measurement here of this low from 2017 to this high going all the way to the 1st of February 2018, and you can see here the Fibonacci levels that we're trading around. Market came down, broke below this trend line here, has been trading into this support zone. Notice how it took it out, but now we're using it as resistance right now. So 129 at this very moment is resistance. Look for this market to respect this level and then work its way down to 125, as long as we can continue to stay below 130. But you know, this down channel right here is being violated, so I'm not looking for any kind of support here in the pound dollar. Once again, the expectation here is that you're going to have plenty of setups that you can actually trade, and for all intents and purposes you really want to be paying attention to what the dollar is doing, because the dollar is going to impact the rest of the markets out there. So with that in mind, I like to say that if you're overwhelmed with looking at all the various pairs, you're a new trader or whatnot, you really want to stick with just one or two pairs. Trade the dollar, do your analysis on the dollar, and then use that analysis to gain insight into what you can be doing in the euro, for instance, or the major pairs for that matter. The euro, the pound, the Australian dollar, the New Zealand dollar, the Swiss franc, the Canadian dollar, and the Japanese yen. Those are all the major pairs that I prefer to trade, but I know that there are plenty of you out there who are also trading all the rest of the pairs. So it's in my best interest to probably just give you an insight into what I'm looking at for the rest of the currency pairs, and then you do with the information what you may. And with that in mind, I hope this is very helpful. This is Andy Garcia signing off. You can get more information at garciaresearch.net. You can also email me anytime, mail@garciaresearch.net. And by all means, comment below if you have any questions, like the video, etc. Subscribe to the channel. I hope this helps. We'll look forward to seeing you at the next update.